All right. So I do trade NQ. I trade on the future side. I also trade on the CFD side. I started in the Forex space. Yes, it is being recorded. I started in the CFD space, and I am now pivoting to the future side as of last year, November 2025. So I'm pretty new in the future side, but it really doesn't matter because technicals and mindset is the thing that runs runs the play all the time, right? You can jump in any market as long as you have the technical and the mindset. All right. So right now, what I'm going to be giving away is kind of how I trade, right? A lot of people do ask me all the time, "What's your strategy? What's your strategy? What's your strategy?" Right? My response is, I don't even think I have a strategy, right? But there's technicals that I look at that I consider my trading edge. And if you want to call that my strategy, you can. No audio, or is that just you? Yes, audio. I can hear. Okay, yeah. So it's just you. All right. So right now, I'm just gonna write down everything how I look at the market. Now, if you do not see it written, I do not use it. I'm gonna say this again. If you do not see me write it, turn your back. Oh, I do not use it, right? Okay. So market structure. Let me just say my trading. Let's call it my trading edge. All right. Market structure, candlestick analysis. So we call that price action. My favorite, literally my favorite, time frame correlation. This is the hardest one to learn. Supply and demand. Let's say this because this actually is market structure, but th this is very important. Understanding the overall direction or time frame. Say direction or and higher time frame. Right? Higher time frame analysis is super important. Okay. So this currently is my trading edge. I don't think there's anything else um that I'm looking at on like a high scale. So if you don't see it, I don't use it. Now, what I'm going to talk about a little bit about of the chart on NQ. This week I'm just going to go over like what I was looking at for this week going into the week and what happened, what played out, what we can see coming into next week, and then we're going to jump on to the mindset side. All right. So for NQ, usually what I do is I like to mark up zones, right? So we're just going to stay on higher time frames. So I'm gonna just make it a we're just going to stay on the higher time frame. So hold on. Let's take all of these out. So I do know that a lot of people on the call, of course, have different ways that they trade. Let's actually make H1 visible. Different ways that they trade, and because there's such a wide variety of skill sets on this call, the main importance is that if you understand the overall direction of what these candlesticks are showing you, because we are at the end of the day, I don't care what strategy you're using, we're all looking at the same data that is being displayed on the screen, and we're all calling it the same thing. These are Japanese candlesticks that we're looking at, right? So if you're not using Japanese candlesticks, we are all looking at the same data. So understanding what the data is trying to tell you on the higher scale is very important. And the reason for that yes, it's being recorded. The reason for that is because it's important to know where is this thing trying to take us, right? Who is in control of this market, right? Can someone tell me who moves the market? When the data is printed and is pushing in any direction, who is moving the market?
The major banks.
Yes. Yes. Jesus. Yo, facts. Jesus is definitely moving the people who is moving the market. That is facts. But yes, institutions are the ones who's placing these buys and sells. You can call them central banks. A lot of people will say like um, investors, so market investors who you can find if it is the a future side, the CME. If it's the non-future side, it would be the New York Stock Exchange. Okay, questions about the recording or when to watch it, that will come later. All right, guys. Q&A is later. So right now we're focused on the chart. Now, the banks are the ones moving the price. The banks are the ones moving the price. So we need to understand where is the overall direction that they're trying to take this thing to. And if you're on the call and you're telling me that, okay, I mainly trade the indexes, right? The Dow, the Nasdaq, the S&P, even gold, at the commodity of just gold or silver, these assets are overall always going to be a bullish, have a bullish overall direction because of what is embedded inside of it, right? Just speaking on the indexes right now, there's major institutions that are behind this thing, right? And these are the top 100, top 500, and top 30 companies of those sectors inside of that market. They're always going to be year over year, generation over generation, as long as they're in there, more on the bullish sentiment long term. So one, we already know the overall direction. This thing is always trying to print new highs. That's what the greedy Wall Street and greedy SME, the Chicago Mercantile Exchange, is trying to do, right? So the idea is, okay, I'm looking at this and I say I draw it in zones. So let's say we have a zone up here, and let's call this at like a ceiling, right? Price is struggling to get above this ceiling right here, this gray box. All right. Now, the idea is if we think in market structure, what are we doing? As we're trying to get up to new highs, we're printing higher lows and higher highs. So we're trying to get above the prior high point. So I'm gonna call that HL. And each higher low that we form as we're printing a bullish flow up, price will fluctuate, right? You can't just go straight up. Can't just go straight up. We will have to fluctuate, and that fluctuation will cause us to create new highs in the market. And on those pullbacks, each pullback will be a higher low, and it should be higher than the prior low that came down when the banks or institutions, whatever, took it back down, right? So and anytime we form a new low in the market that is higher than the last one, the goal, the first goal before even getting to a new high, let's move this out the way. Before even getting to a new high, the goal is to at least clear the last high, right? That's the direction. We're printing high points. Each high point is getting higher, and the goal is to clear the next high to get into a new high, right? Now, there's one other thing that's important about that. If you're buying something, right? We're buyers. We're trying to buy something. I need y'all to answer this in the chat. If we're trying to buy something, are you trying to buy something at the lowest price possible, or are you trying to buy it at the highest price possible? Low or high? Good, low. That's exactly what the banks are trying to do. They're trying to push this thing, but buy at the best price, discount premium. Same terminology, right? Discount is the buys and premium is sell. Now, if you're trying to sell something, you're the seller. You're trying to sell a set of Jordans or a PS5 or a PC, whatever it is. You're trying to sell for you. You're trying to sell at the highest price that you can sell it at because you're trying to get a profit. So the idea is if we're in a market structure, uptrends, downtrends, right? Market structure is understanding the uptrend that the data is printing and the downtrend, and then of course the range because we're not always going to be in an uptrend and downtrend clear as day. So the goal right now is just trying to figure out if we're going to get the best prices, the best discounted prices, the lowest prices possible that the banks can take this thing to remain in an uptrend, right? To get up to a new high. Now that means that the low points are the most important. I don't care about the highs. The low points that the markets make is crucial because these higher lows, these floors will tell you if we are continuing to buy or not. Because the moment the banks take this thing and breaks, right, and breaks any or at least the very recent higher low or support that created the high, right, that tells us that this uptrend, there's something wrong, right? There's something wrong. This does not give me a characteristics that the banks are trying to continue this flow at this view, right? So the idea is that break through the higher low, we consider that a break of structure, and you would have to now anticipate if the banks are going to do something else. What are they trying to do? And usually what happens is, let's say this thing wanted to sell, the banks will now start driving the price the opposite way, right? Creating now what? Lower highs and lower lows. So each high will be lower than the last, telling you that the volume is pushing down. And as long as every low can be lower than the prior one, that gives you the characteristics that we are in a downtrend, right? And the goal, right? The goal, let me just remove this. The goal now would be to, whenever we do form a high in the market that is lower than the last, the goal now is to see if the banks can push this thing lower than the last low. So usually you would just say, all right, let's get past this area to confirm that we're trying to get back lower. So what I'm doing is I'm understanding that on a higher time frame. And if you can understand that, just market structure, that's all it is. If you can understand that on a higher time frame, you would be able to know where the overall direction is pushing to. So what happens in that situation is that the higher time frames print so much data that it takes a while. It really takes a while for it to display the full move. So whenever that move is in play, it gives a lot of people time and opportunity to get in and get out. Right? You're not catching the whole move. That's not the goal of it. The goal is like a train. A train goes from destination A to destination Z. You're just going from A to C. You in, you out, and the thing can keep flowing, and then you may want to get in at S, right? And then flow to all the way to Z or whatever. So you just have to understand the overall direction and understand where is the lowest that I can go or this thing can go before it continues to a new high in an uptrend, and where is the lowest, well, where's the highest it can go that does not go prior higher than the last one to continue going down in a downtrend. All right, that's very, very important. So drop a one if y'all are following with market structure. Just market structure. Direction. Direction is key. Now, direction on a higher time frame, it helps swing traders. My background is swing trading. I'm gonna tell you this: most swing traders are cleaner than scalpers because they understand what the overall story is telling you. And if you can understand the overall story, you know how to zoom in, and that's time frame correlation. Now you can correlate how the higher time frame is telling you exactly where you are at the lower time frame, so you can't get fooled by anything. So I feel like if you are a scalper on in this call, or an intraday trader, or even a swing trader, everyone's mindset should follow a swing trader's mindset, understanding the overall story, right? The bank orders, right? When they place these massive orders, it's so large in contract sizes or lot sizes, whatever you want to call it. It will cause the candlesticks to just print extremely thick candlesticks in that direction that they're trying to print it to, because it's that much volume, and that will show you the structure of the direction. And if you can just have that idea, then you know how to zoom in and not get lost in the sauce. The goal is just not getting lost in all of the sauce or the noise as you zoom in. So just looking at this, looking at NQ, for example, we did create, let's just draw a trend line. Right. So NQ at this moment, from November 17th, we're attempting to push up to this high. The reason why is because this is the highest we ever went. So we can call this the all-time high, right? The all-time high price. On this chart view, the all-time high price is 26 thousand-ish, right? So because that's the all-time high view, um, the goal is just to get to that. area. So everyone's overall direction, overall, should be getting to a new all-time high. That should be the overall direction. As long as we can remain higher, if these lows can keep going higher and higher, then that gives us characteristics of what? An uptrend, attempting to push up to this high on my left. Right? That's the main importance of it. Now, as long as any level, so this will be our last level. We will call this, let's say this is a floor that actually let me take this off real quick. So these are higher lows. Now, the main importance, this is a thing that a lot of people probably don't know, is I don't call something a higher low within the structural move. I don't call that a higher low until it prints a new high. Right? It is higher lows forming, but the overall directions higher low isn't in higher low until we create the new high. So if we're going up, right, we create a high up there and we pull back. This low right here, I can't confirm it to be a higher low until it prints the new high past the last high. Do anybody know why I can't confirm a higher low, even if it's pushing right here? I can't confirm that yet to be a higher low in the overall direction. Can anyone tell me why?
Yeah, you could end up just
Yeah, everything is correct. It could be a lower low. The HL lead into a higher high. It could reverse fake outs. High low could lead exact. Yeah, it could be so much things that can happen. So you need to wait for it to give you that. It's good to have the bias. It's excellent to have the bias, but you still have to wait for it to confirm. This is the same thing with candlesticks. When you're trading and you're waiting to like enter, let's say you're on your entry time frames that you enter from, you have to wait for the candlesticks to close. Do not do not enter. I do this all the time, but this is a psychology thing. You have to wait for it to close for it to confirm the direction, confirm the volume, confirm that, okay, this is a green candle or this is a red candle. Same thing with the direction. It has to confirm that before you can say, all right, I'm 100% stamped. Now, the idea is you have the bias that, okay, we are forming these higher lows on the bottom, but is this the main higher low that will lead into a new higher high? We don't know that yet because, as you just said in the comments, something like this can happen. Right? So this is a pullback. A lot of people will call it a complex pullback. It's not these clean pullbacks that you would get in these drawings, but more complex where that higher low that we was anticipating did not print a new high. So I can't call that the higher low. Guess what? The higher low is this. It's the low that creates the new high. So now we would make that is our high low right there. Let's just for sake of this call, let's make that a little lower. Okay. And this was the last low. So just call it a low because at that point it wasn't higher than anything. It was just low. So that higher low created the new high. And this was just a complex pullback, just advanced. You could call it consolidation, yeah, before it reversed. There's a lot of words you can call it. I usually call it a counter trend. That's one thing I usually talk about is anytime we're pulling back, I would have to zoom down on smaller time frames and try to figure out that trend because I know it's going against the grain. So as long as that trend can break and the price can tell me, all right, is over with, we should see the pullback break. We should see the selling direction get break of structure. We should see all of that switch of direction when the counter trend is getting disrespected. Right. So just taking that idea back over here on daily view, okay, we are forming these higher lows, right? But nothing tells me that any of these are the ones that will create the new high. But it does tell me that the buyers are in play, right? because the higher lows are getting higher, that means every time the banks or institutions are trying to take this thing lower, there's so many orders that prevents it from breaking the last low. So it's telling me the buying pressure is building. We're building, but the idea is where are we building to? Overall, we're trying to get up here. And then from my view, there is because I do supply and demand. I draw my zones off of where massive impulse happened. So if I was looking at like supply and demand, an impulse is the set of bearish candles that dropped aggressively from a ceiling, from an area where bullish and a bearish candle came together and went in an extreme direction one way. That's an impulse, right? You can call that a whole set of bank orders. The order book was just flowing with sales and it drove price bearish. So I draw a zone into the future and let's call that the supply because there's a lot of selling orders up there. How do I know? I'm on the daily. This is a very good time frame to consider the higher time frame play. Where's the overall direction you're trying to get to? So now I'm like, all right, bet. Look at when we sold, created a low, and came back up. Look at how we kept trying to get up there, and we're failing. Literally, we're failing to clear it. But something's happening. Every time we're failing to clear this high, this kind of got up there, but every time we're failing to make that higher, we're still showing bullish characteristics. These lows are still building up. So it's telling me there's a lot of pressure building. So the pressure can do two things, right? There's two directions, up or down. That's all we need to know. So the pressure is going to build and take us in either direction. So the idea is let's see if this low, this is just the last higher low in this buildup, is going to hold. And we kind of got priced to tap it a little bit 2 days ago, Wednesday. So it's like, okay, are we going to hold there? Is it going to come back and retest that last structural point on the daily and continue or attempt now to take us higher? Now, I'm pushing more bullish because of these higher lows that's forming, as well as yeah, honestly, is that's what it's showing me. It's showing me that the buying pressure is building up, but is building up to a supply. Now, one thing I'm gonna tell you about zones, if you use zones or not, it just still counts to if you're looking at it as support or resistant. Um, how many candles should I look back to consider a valid higher? How many candles I'm not following, but is whatever time frame you're looking at. So if I'm looking at the H4 or the daily, you're looking at the ceiling, like the highest that that set of candles are looking at on that particular time frame. And every time frame has a different structure. And that gets into the hardest of the hardest things to know is time frame correlation. Took me years to figure that out. It's just understanding that this time frame's uptrend, and but like for example, the daily and the weekly shows uptrend. H4 shows uptrend, but the hour, 30 minute, and 15 minute all shows downtrends. All the time frames are not telling you the same story, right? We have is indecision. We have the higher time frame saying buy, but everything under H1 is saying sell. The moment where you get everything under H1 is telling you buys, and everything above H4 is telling you buys, you're in the story is all intact. That you get that when you have these nice thick green candles or bearish. So when a candlestick is very large in size, it means that that side of the market is flowing. Everything's flowing. This is where people pass challenges. This is where we get a lot of payouts, a lot of withdrawals, is when you have a nice bullish and bearish candle that the higher time frame is telling you the pressure is just pushing, and everyone loves those seasons. But when everything's ranging, you get the time periods where the lower time frames could say sell, the higher time frame is still in the bullish move. Is that's time frame correlation. Now you got to understand, all right, which time frames is telling me what, where am I in this whole entire story, and how do I take that in? Um, and also when you have a zone, a support, a resistant, a ceiling, a floor, a supply, demand, whatever zone you want to call this thing. Just know this. Every time the price, and when I say price, I mean candlesticks, every time the price comes to any zone, let's say this is a zone, a level. Let's call it a level for the sake. Let's say we hit this level, and then we come back, we hit this level again, and we come back, we hit this level again. All right, hit this level again. Oops. Now, let's say we come back to this level. The idea of zones, eh, you said it, drone, you said it. It gets weaker. It's like a punching bag. Honestly, the zones are not stronger anytime we revisit that because that's a retail trader type of mindset. And I did read that a couple times in some books. But is no, that's incorrect. A level gets weaker more times we revisit it because it's losing the purpose of what it's supposed to do. So that should tell you one thing that sooner or later this thing can get broken. So that's kind of what I'm looking at for this area. Of course, we can reject it hard because this is a daily supply, but I promise you this, we will revisit it again. Right? Something like this can happen. Right? Grab some liquidity or whatever you want to do down there and then continue pushing at a later date because we are trending higher. The lows are still getting higher. This zone right here is getting weaker, and we will now want to revisit the highest that we've ever done. And I'm gonna also tell you this, seasons is important too. You're trading the Nasdaq. This is earnings reports. They want to see what the earnings reports from Q4 did. A lot of times, those earning reports can definitely help push this thing, depending on how, of course, the companies with the most strength of those earnings do, right? So fundamentals also do play a factor. Now, yeah, that is what I'm looking at. Honestly, let's see. Can I zoom down? I'm not even gonna zoom down. So I am looking for NQ to at least show more value. We've been ranging for quite a while, and I want to say the same thing for the other big three. So ES and YM has also been ranging. The ranges could be bigger. I know YM's range has been like larger, but when you're seeing from the daily view that we're not printing nice thick candles and we're just bouncing between the ranges, I think someone said it before. This is like a scalper's playground. They love this because you're just going in between ranges and these are daily levels, so it is pretty strong. Uh a swing trader hates this, but just knowing that we're in between a range, and I think on the weekly it looks even sloppier. Oh my. Yeah. It's like a random floor right here, like a resistant. I mean, a support. And we're just like bouncing, 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 bouncing. Me, when I used to think as a beginner, I did not like this. I used to say, all right, high probability setups only. So if I'm bouncing between these ranges, I just want to look for sells at the top of the range, buys at the most extreme bottom of the range, and I am not trading inside that range. Oh, no, no, no. But as you go up in skill level, and start to back test, look at things, trade, do all of that, you will start to understand where this thing is ultimately trying to do inside that range and know how to flow with the market. So that's very important. But honestly, NQ looks disgusting. ES looks disgusting. YM looks disgusting in the ranges that they're in. But this is where things get real interesting. When something's consolidating, the longer it consolidates, the more or the bigger the push out is. Longer the consolidation, the bigger the impulse after. And also, if the higher time frames are consolidating where all of the volume is stored, you know how much data it takes for the weekly time frame to show you this in a candle? That's a lot of data, or even a daily. So if I'm telling you that the daily or the weekly is consolidating for that long, you should be excited because this is where you can gear up for, let's say we are to go bullish, this thing will break and run because it took so long to build the data. There's something that they're waiting for. I don't know what it is, but once it breaks in whatever direction, is going to push for a minute. And I'm gonna give you an example right here. Consolidation, 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 range, range, push. How many? I don't even know where to take the ruler from, but over 1,000, is that pips or points? Whatever. It pushed for a crazy distance. So the idea for that is as similar to what we're about to encounter whenever we break out. So you should get excited at trying to understand that higher time frame and where it's trying to take you. Because I promise you, if this thing starts flowing correctly, once it finishes that consolidation, that direction that it's taking us will be good once you are understanding the flow and you can just get in, get out as the flow is going. If a lot of people has been taking losses these last couple days or weeks, it's okay. Investors don't even know where they want to take this thing. So how are you going to know? Because we're ranging and we're inside of this range, more losses will come. More like I had losses a lot in this area, but of course I had mainly wins when it was a crazy green week, right? Because I can flow. So just be aware where we are on the higher time frame. It's extremely important. Now I just ran over my timer of because I'm trying to switch topics, but any questions with the technicals, any questions with market structure, correlation of times, before I move on to the psychology mindset piece. And also drop a one if y'all following. Because sometimes I don't know if I'm like going over people's heads. Drop a two if it's like, I kind of get it, but it's like I still need like understanding. So two if you're like, one if you're like, all right, I'm following. I'm following. Yeah. Okay. Bet, bet, bet. All right. So I will take questions again at the end. I was looking for just an hour. I don't want to take from y'all Saturdays. I did start a little late, so like 12:10. I'm looking to end. But if it bleeds over, like I said, y'all could leave. It's being recorded. It's fine. I'm gonna go strictly into mindset after that. Mindset is super important. How much is the mentor? Oh, membership. Well, I don't even know. I think it's 75 a month. Yeah, 75 a month. But I have a channel in there that talks about like what that is all about. But this call is not to promote that at all. Can you go over the trade you took Friday? Higher time frame correlation to your entry. Yo, facts. I would love to do that. I feel like that will take so much time. Let me think how I can do that. Yeah, it will take a lot of time. What I could do is I could put out a video on it. I could like record a video and just drop it for the public. Because it will take a lot of time. So if you're okay with that, I'll do the video right after and then I'll just like send it out. Okay, bet, 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 bet. Yeah, trust me, I would be on here for hours talking about Friday. Can you send your video you sent on print? Ooh, I can't do that. Wait, aren't you on premium, Zach? Or is that a different one, Zach? Is this session record? Yeah, it's recorded. Yeah, yeah. Nah, videos that go to premium stays in premium. But yeah, what's good, bro? But like premium get more sauce, of course, but I'm still giving good sauce to the public. Oh, the recap. Yeah, yeah, yeah. Yeah, of course, of course. Yeah, I can definitely do that. Yeah, I could do the recap. The recap isn't. Yeah, it's good, but I'm gonna just record a new one. I don't mind. I don't mind recording a new one with more details and stuff like that. I think the recap, is a shorter time frame. It's like two with five. It'd be like 5 minutes. But yeah, I'll do that. I'll definitely do that. Okay, now let's switch topics. So, how many live sessions you had that week? Two. All students were able to join. Yeah. So how my live sessions are is 2 to 3. Right, that's my range right now, 2 to 3 until time allows for me to do more. This week I did two, and the first one, the first ever live stream. I hate live trading, by the way. I like to focus. Like I'm big on, like I said, mindset. What you're doing when you're trading is extremely important. What's around you when you're trading is extremely important. I started trading 2019. Ever since I've been trading, I hated trading with others around, distractions around. I usually just put on headphones and bump music and just focus or whatever. Distractions is a big thing on the mental. And I never liked that. But I got out my shell and I said, everyone wants to live trading. I guess that's the flow, so I'm gonna do that. Do you do this full time? I actually don't. But we love milking a job for their income as well. Come on now. My background is finance, by the way, so I'm a grab at any financial opportunity that helps me. So Yes, yes, yeah, yeah. Please don't quit your job. No, 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 no. Here's one thing I'm gonna say about going full time. If you are looking to go full time and take this to the next level, the question you need to ask yourself is, does my business, right? Trading as a business, you're taking it as a business, does my business requires more time from me than my job? If the answer is yes, you're ready. If the business requires more time from me than my job, you are ready. But if it doesn't require more time from you than your job do, you're not ready. And then also financial goals, right? If you can tell me that you've been trading, let's say data, everything is data related. Let's say you put a whole set of data, 1 year, 1 year is clean, 6 months to a year. Do not do this under 6 months. 6 months to me is even too short because the market gives so much uncertainty and different seasons, right? You could be trading all good for six months, and then month seven, eight, disgusting. There's wars, things happen in the world that just cause range, and then you quit your job. Honestly, that happened to me back in 2020. I quit my job, went full time, and I was doing prop firms. Everything went downhill, and then I reverted back. So don't jump the gun. And if you take it 1 year and you say, all right, every month, this is my monthly income, or every month, this is my monthly expense, whichever you want to use. You're trading, even if it's payouts from props or live account withdrawals, you need to be making at least double, at least not the same, right? Because now you're trying to add the extra cushion, at least double what your monthly income is from your job, or at least double your monthly expenses, whichever one you want to decide, because one may be way higher, right? So at least double what you're doing for a year or like 6 months to a year. That will be enough data for you to say, my business requires more time from me. Let's go. It's go time. Take the risk. Life is about taking risk. As long as, of course, everything in your life is in play, then there's no foul. And you have to really trust what you're doing is honestly can benefit you. It's uncapped income, by the way. There's no cap in how much you can make. And there's also uncapped losses. But well, actually, it is capped because you could just lose everything and then you'll have nothing else to lose. But whatever. All right. So yes, what was I saying? Because I like to get distracted so fast. How long did it take you to become consistent? So I've been trading 2019. I became consistent end of 2021. Like 2021, 2022. That's when it happened. What was I doing from 2019 to 2021? I was fooling around. Actually, I was really bouncing between like different trading techniques. Like I took a course, right? I took one person's course. I learned it, loved it. Then I went into another course and I was just going from course to course, listening to people, YouTube videos, all that stuff. And, some may say you're just jumping from strategy to strategy. Yes and no. Um, I was taking a little bit of what everyone was doing and making my own, right? Making my own. And that brings me to one of the topics at the end of the call is yes, it's okay to have one person strategy. And let's say the way my trading style is not anything near yours, it's okay. I don't care. So as long as this is where the importance is, as long as there's something you can take away to add to yours. And I promise you this, majority of people on the call, there is not one person's strategy that you can use fully and be as consistent as them. Impossible because everyone's so unique. Mindset is so unique. How you learn is so unique. So you may be using 50% of what ICT shows and then like 20% of something you learned that help your confirmations of what you see as your individual to trade. So my trading technique did not come from one person. It came from a set of people, and I just grabbed that little things. So one person showed me how to look at time frame correlation. Another person was nasty on entries. Another person was good on swing trading. So I took a little of everything and cultivated my own. And then what I love, supply and demand, like when I supply and demand was the last thing I learned. And when I learned that and the whole concept of thinking like the banks, it does fall in line with a lot of ICT concepts and stuff like that. Um, but it's like, wow, thinking like institutions is clutch. Like it sounds so formal. I like that. So yeah, it didn't take me too long, 2021, 2022. I've seen a lot of growth because I stick to the plan and I've been trading the same thing for the last like 4 or 5 years. So honestly, that's what happened. It's time, it's data. You need a lot of time. So, all right, let's switch over to the fun part, right? Psychology. So I think my screen shows. So everyone sees the screen, right? The new screen now, the doc. Yeah, yeah. Okay, good. So I just want y'all to take away these one, two, three, four, five, 5 points. So I have 5 points that no, I did not walk through my market game plan that I take every morning. Honestly, my premium people only see that because it's very detailed. Um, no, I did not talk about that. So, yes, psychology. Like I said before on the Discord when this Discord was acting up, psychology is 90% of trading. I love talking about the mindset psychology part because that's where people really evolve from outside of the skill. The skill I can teach a kid the skills. Books, trading in the zone. Honestly, I can teach by Mark Douglas. I can teach kid how to trade. I can teach a elderly individual how to trade. I definitely can. It's so easy. But the mindset is the thing that takes us all away. All right. And before I get into these points, I want you to just think of this at the back of your head. We were all in school at one point in our life. All right. If not, we were all in a uh educational setting with a group of people next to us. But let's just say school as an example. You're in class, and let's say the teacher is teaching a subject, and everyone's learning the subject that's like we're the teacher is not pulling certain people to the side and say, I'm gonna teach you it this way. Like they're teaching the same thing. But why is it that half the class passed? Why is it that some people had A's, some got B's, some failed, some just left? And like why is the grades all over the place on the exams and on the final product, right? Think of that to yourself. We're all learning that same thing, but why is not everybody getting the A's? Now, what are the people that are passing doing versus the ones who are getting C's or failing? There's something they're doing. It could be they're focusing more outside of class. It could be they got they got tutors. They're doing more outside of the class, and the people that's failing, they may know what's going on. They just like, I'm not even trying to do it. I don't even have the discipline. Like I get it. I could pass it if I want to, but I just don't want to be here. Right? That's bad mindset. And then there's people that just lost, completely lost. You just need more support. You need like a tutor or somebody. Now that's trading. We're all looking at the same data. We're all learning the same thing. But the concept that is not allowing all of us to be as profitable as the next person is because of psychology and because of the way we think when we're trading. I promise you that 1000%. We are not robots, so it's hard to think like a robot, and you need to think in a way that a bot will think if you were to create a trading bot. And that removes emotions. The idea is if you remove emotion, you are unstoppable, right? You should not be happy. Okay, you should be happy for yourself, but you shouldn't be all jolly happy if you hit a trade. Of course, a big trade, like I'm excited. Yes, be excited, but don't get too happy because that helps that defeats it. You're gonna get too confident, and that happened to me multiple times. So everything I'm talking to myself as well, guys. Um, and then if you lose, losses happen. Do not get discouraged if you take a loss. A bot won't. A bot don't care about taking a loss. A bot don't care about taking a win. This is where you get happy. You get happy when the payment hit the bank, right? Drop some dollar signs or bank, what is it? The dollar, anything that's a dollar sign related or a money sign or whatever in the chat because of dollars. Like when it hits the bank, that's when you should be jolly, right? You're not happy when you hit a trade because the next trade you could blow the whole account, right? Yeah, go sit your jolly butt behind somewhere else. So please think like try to remove those emotions. So step one or process one. I'm gonna say, by the way, I like giving my credit where it's due. All of these concepts you're looking at came from Mark Douglas's mouth itself, all in the trading in the zone. Yeah, the book. So Mark Douglas said all 5 points. How much premium? All right, I'll answer that later. So, um, no discounts for premium. We did that already. Um, everything for premium information is in the Discord. There is a channel that say premium. Now, thinking in probabilities, not individual traits, right? I'm gonna actually have a diagram or display to show what that means. But you have to say, all right, trades happen and they're so unique and they keep happening. So when I place these trades, I can't be looking at my trading edge, the thing that I think is the way my strategy is displaying how I win. Going that like you can't understand what your trading edge will do in one trade. It's impossible. You need a set of trades, right? Those set of trades, the data that you're taking from those set of trades, like 20 to 30 trades, that is the probability. The probability that everyone on this call's trading technique is have a higher probability. I don't care about higher win rate, right? Higher probability. Who cares about win rates? I hate when people ask me that. Here's why. You can have a lower win rate and still bank. How? I'm gonna show you that in the next slide. So probability is over win rates. You need a higher probability of executing trades that have those higher probability win percentages. Now, trade objectively, not subjectively. You need to know what both directions is going to tell you. So when you think about what's going on, what the candlesticks are telling you, please do not guess. Don't predict. Yes, it's going to go up. And in the last diagram, when I was showing you NQ, and of course, it's showing characteristics that it wants to push up, we are still aware of what's going to happen if it drops. Yo, stay ready so you don't have to get ready. Do not let the market play with you like that, right? Like you need to be able to understand objectively if this happens, then this can happen, right? That is objective thinking, not subjective. Please do not think subjectively. Do not say. And I try to do that too when I like send trade ideas to my group. It's like I try to say, all right, this is where the overall flow is taking us. But if that doesn't happen, I can look for the opposite direction in this way. And that brings me back to Friday's trade. Friday, I was not looking for sales. I didn't sit down at my desk looking for sales. I didn't even know where we were going. That's another thing Mark Douglas said. You do not need to know what happens next. That's a thing that a lot of people struggle to even comprehend. You do not need to know what happened next because the market will show its hand. If the market don't show its hand, you're impatient. You're predicting. That's the subjective. You're predicting that something's about to happen, and then you're like, go, right? So of course everything was looking good on NQ for me for buys. It was nothing telling me sells at that moment. And then candlestick started to form itself. It showed its hand and I grabbed it. I literally just placed a trade. You just place a trade. You set your risk, place a trade. No emotion, just place a trade, right? With the confirmations in line that you set yourself. Your trading edge. You thought in probability, right? I don't care if this trade that I'm about to set because I now my bias of the buy don't look right, and then I'm seeing sells more. Place a trade. Pull the trigger, like pull the trigger as long as your risk is set, you're within your risk parameters. That's all that matters. I don't care about how much you're profiting. I don't care about the range that you're profiting. It's your risk that keeps us here. Managing your risk, and that's in percentages. Calculating your risk. That's for another to call. But you always your risk should always be in percentages. So accepting, do you do market execution every time? Yeah, I do market execution every time. And yeah, I don't set limits. I don't know what. Well, first of all, I'm always looking at the chart when I'm about to enter. So it's not that I'm not looking at it. And I do say that is limits is great for people that do work or just can't be on the charts. Mainly those individuals will prefer limits. And a lot of times you don't know exactly like you don't know exactly where it's going. There's a range. So there can be times, it comes and wick your limit or just miss the limit and then goes in the opposite direction or goes to your limit, bleeds over and then comes back because we don't know the exact area, but you do know the idea of the range that you're looking for to reject from or go through. So that's very good to know. But now I do market execution because I'm just staring at it. Accept the risk before you enter the trade is important. I just had to pause to drink water, but accepting your risk. What that means is like if I set a trade and I'm saying I'm risking $100 to make $500, right? You risking one to gain five times that. Why am I closing that trade if I go and draw down negative $25 or negative 70? You put the risk there, accept it. Like a bot won't just close it because I'm in drawdown. Like I do understand if you're in profit and then you move your stop loss to break even and all that. But if you put your risk somewhere, you let it hit. Let your stop loss hit. If you're scared for your stop loss to hit, or if you're closing before that, your position may be too large. If you're entering a trade and your heart rates start going crazy, you're over leveraging for sure. There's no reason that your heart rate should be pounding away if your leverage or your position is low, where that hit on your balance is like small in percentages on the balance. So that loss ain't gonna do nothing really. Right. So always accept the risk that you set yourself. And this is another key thing. Accepting the risk means you're placing the trade with the mindset that you already took the loss. You are comfortable with that negative whatever, right? If I'm placing a trade and my balance is $500 and my risk is $100, I am okay with ending this trade and my balance will show $400. What will that do? That will remove the emotional connection from me and the money. And as long as you can do that, become emotionalist, you become powerful at trading. And it's not your strategy, it is your mindset. I promise you this. I'm telling you, a lot of y'all strategies is probably top tier. It's probably better than mine's. I promise you. But my is probably better than yours, which is why I can go the distance. So if you could get your mental up there, you can surpass me by far. There's probably people on this call that's way better than me. So get the mindset right, and you gonna go crazy. I promise you. Strategy clean. And there are people too where they would have a strategy and it's like they're taking losses or something, and they can't comprehend that the losses aren't happening because of strategy. It's their mental, it's the way they're risking, the way they're over leveraging, the way they're impatient, the way they're fearful, the way they're like just like anxious. All of that is causing them to lose. So they're like, bump this strategy, bro. Let me go learn this thing. This ain't cleaner. So fix the mindset and you will be good. Last step, trading is you versus you. This is a you versus you psychology. You can learn everything you can from me. You can learn everything you can from the greatest mentor that you have or whatever. But at the end of the day, they are not the person with you when you are entering the trade. They're not the person in your brain thinking, all right, let's buy, let's sell, let's exit, let's move this, let's do that. It's you at the end of the day. You can't blame nobody but yourself. You can't blame nobody but yourself. It's you versus you at the end of the day. And how badly do you want it? I want it badly, right? It's the burning desire to hit a certain goal, right? Trading, of course, you're in it for the opportunity to build financial freedom and to also have money used as a tool to get you to the next direction. But how badly do you want that? Right? The desire. If you say, I want that badly, I'm trying to retire my parents, I'm trying to buy this crib, I'm trying to move, I'm trying to quit my job. But then you over here taking losses that is not against the trading plan that you said. The losses you taking is all emotional losses. You waking up and you trading from your phone in your bed, right? You driving, trying to place a trade at the red light. How's that treating it like a business? You trying to place a trade with all these distractions around you, that's not treating it like a business. You will see growth when you start programming it like a business, taking data like a business, meaning go look at things quarterly, look at things monthly. Not only your trading, but how's your mental in those time periods? What is going on in your real life? Whatever you're doing in the real life is going to trickle into the charts. I promise you that. If you're somebody that tells me, "Oh, I am anxious all the time, I have a lot of anxiety," that will bleed over. If you're a greedy person, you like sports betting or do all that, that will bleed over. If you're impatient, you can't really you can't wait for stuff, that will bleed over. If you're somebody that's clean, you don't have those type of issues, you're more like level-headed during like intense periods, that will show itself and you will be nasty as hell. Promise you that. Um, all your favorite influencers, do they rely on somebody? No. They trade independently. Everybody that y'all see that y'all look up to trade, they do not wait for somebody to tell them, enter here, look for this. So all that signal talk gotta go. If you think you want to be one of the best traders in like for what you feel like is a good trader for you and do this thing for the goals that you set yourself, you can't rely on somebody. All right. Here's my goal for people to come into my Discord to eventually leave. Here's why. Because you're coming into my Discord, my premium side, you're learning everything from me. You're learning how to be independent, and then you go. It's like a it's like somebody working and then they have employees. You're trying to train your employees to go up to go. You're not trying to keep them there. So all y'all favorite influencers is just trying to get a bag off y'all, because they're good marketers. Now that's not my goal. My goal is to have you come in, and it's not for a long time. You're in, you get the mindset, you get the skill, you get whatever you need to take away, and you're so independent that you make the decision. I don't gotta be here. I can go off and trade. And a lot of these forums that people be in, like pages and trading, the people that's really banking, you don't see them nowhere. First of all, they a lot of times they're not on Instagram, right? If they're on Instagram, they're turning it into the business side, right? All these massive traders on Instagram floating profits, they're trying to turn it into the business side. But if you're saying I'm not trying to go into the business side, what's the point of flashing all the bread that you're making? A lot of the nastiest traders are MIA. They literally are banking, and y'all don't even know that's happening. So yes, do not get distracted by social media. Everyone has a different time period. It's you versus you. Trade independently, not dependent. Do not depend on anybody. And then this is the last part, which is thinking probabilities. This is where the thing get real interesting. So I'm gonna bring you to this chart. This is the last thing for y'all. This should take like 15 minutes, right? Very last thing. So cool. Now, let's say my trading edge, that my strategy is simple: buy at support. That's it. Buy at a floor when the price comes down and I go up to the ceiling. That's my trading edge. I back tested it, meaning I went back in the data and I looked months and days and just back tested, just looked at different information to say, I'm gonna buy at this floor. And whenever price reject, I'm going to the ceiling. That's my trading edge. Now, when you think in probabilities, like Mark Douglas says, it's a set of trades, not one trade. So we have the trading edge. Boom, clear. Now we need to trade, thinking objectively. All right. So let's give the example. All right. So let's clear this real quick. Okay. Actually, let me just move this stuff over because I did not know this was gonna be in the way. Okay. So our example here is, remember, we're still using our edge is just trading when the candlesticks hit a floor, and we're just trying to go back up to the ceiling. We're going in between a floor and a ceiling. That's all it is here. Okay. So let's say our risk to reward is 1 to 3. We want to risk one and gain three times that. So our risk is $100 in this example, and our reward is $300. Now we have 10 outcomes here. Starting balance is $1,000. And this is going to be the result in thinking in probabilities when you have a trading edge, right? Now, in this example, let's say price, we start with $1,000. We're going to do 1 to 3 every single time. 1 to 3. So risking $100, and we're going to gain 300 every single one of these 10 examples. So let's say price is doing its thing, coming down, right? Come up, come back down, boom. We hit the trade. This is a stop loss is the red. So your risk, your $100 risk at the bottom. And let's say you're just trying to go back up to that top, right? That's your reward, the $300. And price did, boop, good. So you're good. You're up. Well, you got $100 from that. 300, my bad. $300. Boom. Good. So you're up 1,300. So 300. Good. Now next trade. This was the next day. Price come down, go up. Boop. Oops, my bad. Let me just stop right there. You set your parameters, everything that needs to happen, show itself. You just place the trade. Place the trade, set your risk, profit at the top, right? And then trade come up. All right. So this was $100. Should I like go up and down subtracting? I'm gonna just do it like this. So negative 100. All right, but all right, third trade, third trade. Let's say the same day. You was like, nah, I ain't about to do this. I ain't about to go out with an L. I just got $300 2 days ago or yesterday. So trade came down, same stuff. It's the same edge you set yourself. You didn't change nothing. 1 to 3, risk 100, gain 300. Price, go up, done. All right, good. Down. Now you're down $200. All right, next trade. This was you say, I'm done. Took two L's. I'm done, bro. I'm chilling. Let me go clear the mindset and go see what's going on. Take some time off, and then you come back the end of the week. Trade come, hit, same stuff you set. Buy at support at the floor. Set your risk, risking $100. You're trying to get back up to the top, and you get blessed. Boom. You gain $300, risking 100 to gain three. Right? Thinking in probability, a set of trades, not just one. Doing the same thing over and over like a bot. The next day, set your risk, set your TP. Feeling a little confident, everything good. You up a good amount so far, and then that shit just kept going. Ain't even give you time. All right. Nice. All right. So negative 100. And then the next day, let's just speed up time. So I'm gonna just show you. So let's say again it did the same thing. And this was negative 100. And then let's say the like 2 weeks later, you took a nice little break. Um, mm, mm, mm. Say you bought down there when that was going up. I know people hate when this happened. So it's going up, it's going up. Almost made it up there, and then, woo, boy, do I hate when that happens. Um, Tops up love doing that. So yes, negative 100. Adding positions. Let's say it just went straight down, and you were like a little impatient, not waiting for it to bounce, and just like went straight down. Um, adding positions. Intraday, I don't really add positions like that, especially on the future side, because I hate how it does the average. On the CFD side, when I'm trading that side, it's on the CFD side, I trade US 30 and the NAS 100. That's it. But when I trade that side, I'm a swing trader, so yes, I add to my position if I'm trading and I got in a move on Monday or Tuesday, and it's looking like it could be a swing trade. Yeah, if I see a nice pullback on Wednesday or Thursday, whatever, I'll re-enter adding to that position because it doesn't take the average. You just get in where you enter, and the last order is exactly where you press enter from on the CFD side. So I don't tend to add positions. Also because the contract size on the future side, that intraday move that I'm planning to hit, it's big enough for me to be satisfied with those gains. So even if it's pulling back, I'm not really doing much. I'm just letting it flow, because I'm satisfied with the contract size that I placed. Let's see. But yeah, I add to position if I'm swing trading on CFDs. Okay, good. So this ninth trade, come up, come down. You set your RR, risking $100, gaining three. And after one, two, three, four losses, I know that mental was shaking. You finally made it. Thank God. $300. Doing the same thing. You didn't change not one thing. You realized, okay, day 8, you was a little impatient, which is fine. Not perfect. Uh, Move this over. Okay, and the last day, 10th day came. All right, come down, drop to the support. You set your risk, set your TP, and then we push up, giving you another 300. So now we have 10 trades where you lost six times. You lost six times and you gain one, two, three, four. You won four times. So six losses. You have more losses. So if you look at win rate, your win rate is terrible because you lost six times and you won only four. So when people say, "Oh, what's your win percentage?" and I tell them that, they be like, "Oh, that's not a good win rate." And then I do this. I show them what the ending balance was from those 10 trades, right? So you lost six times, that's $600. Is my math right? Yeah. And then you won four times. So four times 300 is $1,200. So out of those four wins in probability, a set of trades, you got 1,200 and you are down 600. So you are now your ending balance. It started with $1,000. It went down to 600, went down, then went back up 12. So you should be at $1,600, right? Am I right? I should be right. Yeah. So you are up $600, right? That's trading and thinking in probability. Six trades, you took a L, all risking 100, 1%, well, $100, which and getting a 1 to 3. You only had to win four of them, and you're still on the green side, right? So yeah, drop some gem emojis for that. That was the end of this call. Before I do like random Q&A, and I hope y'all took away some stuff. Definitely hope y'all took away some stuff from that. Oh yeah. So I'm just gonna stop the recording and I'm gonna take some questions and y'all are free to go.